What is transaction? Transfer of property from one person to another person is a transaction. Ascertainment amount due to business. Amount due to business means how much amount is receivable to business. Accountancy process, that is, accounting is a theoretical study. Accounting is a practical work. It's a theoretical way, it's a practical work. Hello, my dear students. I am Dr. B.S. Subramania, called by name Dr. BSS, Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. In this session, I am going to hand Fundamentals of Business Accounting, First Semester, Unit 1, Session 1, in favor of BBA. It is an Introduction to Financial Accounting. So today we are going to get the concepts of accounting or accountancy, everything we are going to deal. It is Introduction to Financial Accounting. This is Fundamentals of Business Accounting, First Semester, Unit 1, Session 1, in favor of BBA. We'll start today this session. What is an account? It is represented by A by C. When you say A by C, it is called account. An account is a summarized business transactions An account is a summarized business transaction relating to a person, firm, means partnership firm, and an industry, company, to know profit or loss. So, you are newly joined here in first BBA. The major item is account. Everybody in a firm, individual or a firm or company is going to prepare an account at the end of the year to know whether they earn the profit or suffer the loss. So that we are going to deal here. An account is a summarized business transactions relating to a person, firm, and an industry, company, to know profit or loss. At the end of the year, every businessman wants to know that whether they earn the profit or suffer the loss. Here, business transaction. What is actually transactions? Transfer of property from one person to another person is called transaction. What is transaction? Transfer of property from one person to another person is a transaction. There are two types of transaction. One is cash transaction, another credit transaction. Which are the two types? One is cash transaction, another credit transaction. What is cash transaction? Transfer of property from one person to another for a cash is called cash transaction. I will repeat. What is cash transaction? Transfer of property from one person to another for a cash is called cash transaction. Then, what is credit transaction? Transfer of property from one person to another for a promise. The customer says, I will pay your money after 10 days, after 15 days, after a month. It's called the credit transaction. So, accounts includes connected to business transaction, cash transaction as well as credit transaction. In India, Credit transactions are more and cash and carry transactions are less, relating to a person, firm, or an industry to know profit or loss. Which are the two types? Number one, type business transactions. Transfer of property from one person to another. Transfer of property from one person to another is called a transaction. So, transfer of property from one person to another person is a transaction. There are two types of transaction, already told you. One is cash transaction, another is credit transaction. What is cash transaction? Transfer of property for a cash. What is credit transaction? Transfer of property from one person to another for a promise is called credit transaction. So, accounts includes both cash transaction as well as credit transaction in respect to person, in respect to partnership firm, in respect to industry or a company to know profit or loss. We'll move on. Now, definition. Accounting is the process of identifying, measuring, and communicating economic information to permit informed judgments and decision by user of the information. Here, accounting is the process of identifying, measuring, and communicating economic information to permit informed judgment and decision by users of the information. So here we identifying, measuring, and communicating the ideas to the people is called accounting. Profit to business is like food to human body. This is important. We are doing the account to know that whether earn the profit or suffer the loss. Profit to business is like food to human body. What are the objectives of accounting? Number one, maintain proper records of business, calculation of profit or loss of the business at the end of the year to know the profit or loss, knowing the source of revenue and the items of expenses, how we got the revenue, how the expenditure will be made, ascertainment of financial position. Financial position means how much asset we are having, how much liability you have to pay. What is the position? Ascertainment amount due to business. How much amount due to business means how much amount is receivable to business. So these are all the function. I will repeat. Objective, maintain proper records of business, calculation of profit or loss of the business, knowing the source of revenue and items of expenses, ascertainment of financial position, ascertain amount due to business. Now, accountancy. So I already told you about accounts. Now, accountancy. Accountancy is the theory and practice of accounting. What you are doing is accounting. How to do the accounts is called accountancy. I will repeat. What you are doing is called accounts. How to do the accounts with the help of theory and practice is called accountancy. So accountancy is the theory and practice of accounting. Difference between accountancy and accounting. Accountancy is the theory and practice of accounting. Accounting is the science and art of actual recording. Accountancy is the basic subject. Accounting is the branch of accountancy. Accounting is a branch of accountancy. Accountancy process, that is, accounting is a theoretical study. Accounting is a practical work. In a theoretical way, it's a practical work. Accountancy with its set of principles is definitely a science. Accounting is more in art. It's just like an art. Hope you understand. It's only theory and practice, whereas this is practical. Practical is accounting. How to do the accounting is called accountancy. Functions of accounting. There are two kinds of accounting functions. They are historical function and managerial function. Which are the two functions are? One is historical function, another managerial function. Historical function means keeping the accurate past transaction record of the business steps, recording and managing of all monetary transaction, money transaction. Classify the records in different ledgers. Classification in different ledger. Summarizes for hassle-free reviews. Final accounts is preparation up to know the financial position of the business. Communicating financial information to the prospective sector such as shareholder. Shareholder means the owner of the company, researchers, government and suppliers. Managerial function. It is the responsibility of the finance manager to take the decision in any business. So managerial functions are those functions which help to make smooth decision and ensure the accurate result. So all depends upon the financial managers to take the decision. What are the things you are looking after? One, forming the plan. You have to prepare the plan. Financial manager has to prepare the plans. Controlling financial policy has to make the policy to help the firm. Preparation of budget. Budget is a proper income and expenditure. Controlling the cost by comparing the cost and work efficiency. Evaluating the performance of the employee. Find out whether the employee is working or not. Analyzing errors and mistakes in the past record to make the accurate reports. So find out what are the frauds are, what are the errors are, and performance of the employee and preparation of the budget. Now, write a note on accounting cycle. This is important. The accounting cycle is a process that business use to identify, analyze, and record accounting event. Whatever the accounting events come, that will be recorded in accounting cycle. It is a standard process that typically involves 8 steps, and it starts when a transaction included in the financial statements. The accounting cycle is a circular process that is active as long as company is in business. So as long as a company is business, you are going to prepare the accounting cycle in a circular process. In a round process, we are going to do. Write a note on accounting cycle steps. Analyze and record the transaction. Pass the journal entries in the journal. Post the transaction into ledger. First, you have to pass the journal entry, then post to the ledger. Prepare the trial balance. Make adjusting entries. Prepare financial statement. Close the books. So, there are steps to follow. Definitely, it will come from the examination point of view. Analyze and record transaction. Pass the journal entries in the journal. Post the transaction into ledger. Prepare the trial balance. Make adjusting entries. Prepare financial statement. Close the books. Now, diagram representation. So, this is your accounting cycle. First, business transaction leads to journal, journal to ledger, ledger to trial balance to finance. How it will be? First, business transaction. What are the transaction? You have to pass the journal entry, journal to ledger, ledger to trial balance to final account. So, this is the traditional. This you have to learn. First, business transaction. First goes to journal, journal to ledger, ledger to trial balance to final account. This is the traditional way. Now, modern or English system, business transaction leads to subsidiary books, subordinate books. Which are the subsidiary books are? One is the cash book, Second one is the purchases book or purchase book, sales book, purchases return book, sales return book, bills receivable book, bills payable book, journal proper. We are going to explain detailedly while you are touching the subsidiary books chapter. So which are the subsidiary books are? Cash book, purchase book, sales book, purchases return book, sales return book, bills receivable book, bills payable book, journal proper. Then it will come to ledger, ledger to trial balance to final account. Business transaction, first we'll go to the subsidiary books, subsidiary to ledger, ledger to trial balance to final account, business transaction. Now, accounting cycle. Assets minus liability is equal to capital. Formula, assets. Asset means property owned by the business. Liability is a payable by the business to outsider. Capital. A minus L is equal to C. If you take the C that side, A minus C is equal to L, or A is equal to, if you take the minus C comes here, this is A minus C, this is A is equal to, if it comes to, this is C plus L. A minus L is equal to C, A minus C is equal to L, A is equal to C plus L. So asset minus liability is equal to capital, A minus L is equal to C, A minus C is equal to L, or A is equal to C plus L. Calculate the missing figure. Assets, capital, liability. This is a problem for 5 marks. Calculate the missing figure. Assets, capital. Assets is 2 lakh, question mark, 90,000, question mark, 90,000, 75,000, 3 lakh, 1 lakh, question mark. We'll get the answer now. First one. If the lab, here asset, you take the liability is equal to capital here. Asset, A minus L is equal to C. A, what's your L? 90,000 comes here. Then C will be 2 lakh minus 90,000 is 1 lakh 10,000. Second one, asset, here 90,000 is there. Assets, question mark, 90,000, 75,000. A minus 75,000 is to 90,000. A is equal to 90,000 plus 75,000. A is equal to 1,65,000. Number 3. A minus L is equal to 3. 3 lakh. Asset 1,20,000 capital. 3 lakh minus 1,20,000 is equal to L. Here A minus L is equal to C. Your C is 1,20,000. If you take that side 1,20,000, L comes here. So 3 lakh minus 1,80,000, 1,80,000 is the L. Hope you understand. I will repeat if you want. What is the formula? A minus L is equal to C. A minus C is equal to L. A is equal to C plus L. Calculate the missing figure. 2 lakh, question mark, 90,000. 2 lakh minus 90, 1,10,000. Then question mark, asset, 90,000, 75,000. 90 is equal to 90 plus 75. Minus 75 becomes plus 75, 1,65,000. Then 3 lakh minus L is 1,20,000. If you take 1,20,000 plus 1,20,000 become minus 1,20,000. L comes here. L become 1,80,000. Preparation of accounting equation. Started business with rupees 1 lakh. Cash 1 lakh. No bank, no stock. Your capital is 1 lakh. Deposit cash into bank rupees 15,000. 1 lakh. How much deposited? 15,000. So out of 1 lakh, how much money has gone? In a bank 15. So here, cash become 85,000. Cash at bank 15,000 is equal to 1 lakh. Purchase the goods for cash. You already 85,000. How much goods purchased here? Purchase goods for cash to the extent of 20,000. Purchase goods for cash. Purchase goods for cash rupees 20,000. Cash 85,000. How much goods stock here? 20,000. Bank 15,000. 65 is the cash. 15 is the bank account. Stock is equal to 1 lakh. So purchase goods for cash 20,000. Stock will come. You already 85,000. How much goods purchased? 20,000. Deduct, it becomes 65,000. 15,000 is a cash at bank, and 20,000 here no stock is equal to 1 lakh. Hope you understand. So I have given introduction class here. I explain what is account, what is accountancy, difference between account and accountancy, and accounting equation A minus L is equal to C, and how it will be accounting cycle. First, business transaction lead to journal, journal to ledger, ledger to trial balance to final account. This is the first system. Second one, moderate system. Business transaction leads to subsidiary books. Which are the subsidiary books are cash book, purchases book, purchases written book, sales book, sales written book, bills receivable book, bills payable book, journal proper, then leads to ledger, ledger to trial balance to final account. So we have to calculate the missing figure. A minus L is equal to C, which are the figure comes then. And missing the what's called, we have some transaction I given how to solve this problem. Also, I have solved the problem. Hope you understand. We'll meet in the next session with some more ideas about the introductions of accounting. Till then, goodbye. Meet in the next class.